You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is June 18th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Monday. First thing to know is U.S.-China trade worries take center stage. Escalating trade rhetoric will keep investors on their toes after both the United States and China announced tariffs last week, raising tensions between the world's 2 largest economies. The Trump administration said on Friday it will impose a 25% tariff on a list of 818 items of Chinese goods worth around $34 billion beginning July 6th. Measures affecting an additional 284 products worth $16 billion will be subject to review before taking effect. In response, China said a 25% tariff will be implemented on U.S. goods, including soybeans, oil, and electric vehicles worth $34 billion starting July 6th. Another list of U.S. imports worth $16 billion will be subject to review before being applied. Washington and Beijing appeared increasingly headed towards open trade conflict after several rounds of negotiations failed to resolve U.S. complaints over Chinese industrial policies, lack of market access in China, and a $375 billion U.S. trade deficit. Second thing to note today is U.S. stock futures pointed to heavy losses at the open as worries over trade war between the United States and China kept investors on the edge. The third thing to note today is the dollar stays near an 11-month peak. The dollar held near 11-month highs against the currency basket, supported by the diverging monetary policy outlook between the U.S. and Europe, although worries over a brewing trade conflict between the U.S. and China slowed its gains. The U.S. dollar was a shade higher at 94.50, remaining within sight of Friday's 11-month high of 95.13. The fourth thing to know today is OPEC said to discuss smaller output hike than expected. Oil markets weighed potential outcomes for a meeting of major oil producers in Vienna later this week. The latest headlines said that the Organization of Petroleum Exporting Countries, along with Russia, will discuss an oil output hike of 300,000 to 600,000 barrels per day as it seeks to compromise to overcome Iranian dissent. Last month, it was reported that OPEC and Russia were aiming to boost output by 1 million barrels per day at the June meeting. And the fifth thing to note today is the ECB's Central Banking Forum kicks off in Portugal. The 5th Annual European Bank Forum on Central Banking is scheduled to take place in Sintra, Portugal from Monday to Wednesday. It will focus on price and wage setting in advanced economies. During the 3 days of sessions and panels, approximately 150 central bank governors, academics, financial journalists, and high-level financial market representatives will exchange views on current policy issues and discuss the chosen topic from a longer-term perspective. Our second story today is from MarketWatch.com. Elon Musk shows off new Tesla production line, and it's in a tent. Elon Musk showed off Tesla's newest production line in a weekend tweet as the electric car company pushes towards its goal of making 5,000 Model 3 cars a week by the end of June. The new production line is the third at Tesla's Fremont, California facility, and apparently was built in just 3 weeks in a tent-like structure next to the factory. The new line is apparently rolling out dual-motor high-performance M3s, a new version for $78,000 that the Tesla chief executive announced less than a month ago. On Friday, Musk reportedly sent an email to staff congratulating them on their efforts, but said radical improvements still need to be made to reach their production goal. All parts of the Model 3 production system are now above 500 cars per day, and some are almost at 700 cars already, Musk said in the email, which was obtained by CNBC. Our third story today is from CNBC.com. Google places $550 million bet on China's second largest e-commerce player. Tech giant Google said Monday it will invest more than $500 million in China's second largest e-commerce player, JD.com. As part of a strategic partnership, Google will put $550 million in cash into JD.com, the company said in a statement. In return, Google will receive more than 27 million newly issued JD.com Class A ordinary shares at an issue price of $20.29 per share. That's equivalent to $40.58 per American depository share based on the volume-weighted average trading price over the prior 10 trading days. JD.com listed American depository shares in its group company on the NASDAQ in 2014. Our final story today is from Investing.com. General Electric's days on the Dow are numbered, and there are 7 possible replacements. General Electric's share price has been on a momentous free fall for over a year now, as the once mighty international conglomerate continues to see its business decline. Once venerated for its extensive business lines and exacting management practices, more recently GE has been in turmoil. Almost all of its top-level executives have exited over the past year and a half, including CEO Jeff Immelt, who left in August 2017, CFO Jeff Bornstein, who departed in October 2017, and top international executive John Rice, who parted ways with the company in December 2017. As the company and its shares hemorrhaged, divisions including GE Capital were sold off to contain some of the bleeding, and its till then reliable dividend was cut in half for only the second time since the Great Depression. The veteran conglomerate had a slow recovery from the 2008 financial crisis and never managed to regain pre-crisis highs, it's $42 a share. Indeed, it took GE 7 years to return to its $30 threshold. From there, in the space of just a year and a half, the company's post-crisis gains evaporated. General Electric now trades at a meager $13.30 as of Friday's close, and it could be headed lower. And that, ladies and gentlemen, is news you can use for today, Monday, June 18th, 2018, your Options News Rundown. I'm Dan Passarelli, Trade Smart, and have a great day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.